You know how useless I am as well? I'm literally always at home fucking staring at my computer, and this woman asked me for one nice thing her entire life, and I'm just gonna go back and say, oh, I couldn't figure it out.
Damn, the intro for this episode is going to go so hard.
This episode is sponsored by SKALE. SKALE has differentiated itself from other layer 1s by offering users a network of gas-free, interoperable EVM L1s where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. To learn more about the gas-free architecture and growth of the SKALE ecosystem, visit the SKALE Research Hub at scale.space/research. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. Follow and reach out to Chaos Labs on X to learn more. Hey everyone, today's episode is sponsored by GLIF. GLIF is Filecoin's foundational DeFi primitive, enabling Filecoin holders to earn rewards on their Phil tokens by lending them to a diverse pool of Filecoin miners. Got Phil? Deposit it with Filecoin's first and most popular DeFi protocol by visiting glyph.io today.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today, I'm joined by Danny, Dan Smith, and Ryan Connor, who will shortly be with us. We're going to talk about all that is happening across markets, with the first thing being Hyperliquid, the greatest thing to have ever launched that could change the fabric of society. But maybe before we get started, Danny, do you want to give a little, I guess, overview of everything that's been happening? We saw a lot of liquidations yesterday. Are you okay?
Yes.
Dude, give the overview, man.
Oh, I can't. Ryan walked away. That was hilarious. Yeah, I think big thing with the markets this week, there's been a ton of volatility. Bitcoin flirting with 100K, either new market participants or existing, like getting really excited about, this milestone, and people loaded up on leverage, and we saw some pretty crazy, like a pretty wacky Darth Maul candle on Bitcoin recently, and surprisingly no sort of alt activity related to that until just recently, where we saw kind of more across the board liquidations on BTC and alts, driving some of that activity. So I know on Hyperliquid, I think on their stats page the other day, they saw over $1 billion in total liquidations, which is pretty impressive considering just the total amount of deposits on the app. That's quite a high amount relative to the amount of size even being traded there. So yeah, just I think people getting excited, wanting for stuff to keep sending, and getting smacked in the face.
They love the coins, man. They love them so much they want to own like 20 times the amount of money they have with the coins. But yeah, like you said, big liquidations. Alts got hammered today and yesterday. To my listeners, do not check your portfolio or the charts. They do not look good. But like you said, it's like we're close to that 100K, and then obviously, well, not obviously, I didn't know this, I was long, but obviously it's a mental resistance. A lot of people selling 100K, which makes me upset.
Yeah, I mean, it's kind of interesting to see it, right? It took a while to break it. We break it, and then there's not like a ton of legs going higher. Then you fast forward, I don't know, what was it, 3 to 5 days, and now we're getting smoked. These pullbacks are pretty normal throughout history, given where we are in the cycle and looking at previous points. I think it's kind of like everyone kind of knows these are coming and yet still gets addicted to the leverage and plays a part in making these massive drawdowns. But it was interesting. We were having this conversation like right before this all melted down, I think it was 1 or 2 mornings ago. And it was like, what does cycle top look like? And I don't know, when you start thinking about where we are, like you can definitely paint the picture. I've taken 0 chips off the table at this point in time. So to take this with a grain of salt, but nothing like fundamentally changed when we started rallying outside of the regulation side of things. New president bringing in administration alongside him that is very pro crypto, and other members of Congress coming in that are like outspokenly pro crypto as well. So that all is great, and I think it played like a emotional catalyst. But the reality of those implications are politics and regulation moves incredibly slow. So anything that like wants to get changed will take months, if not a year and change, to actually be implemented and executed upon. And then inauguration day is like what, January 20th, I believe. So I don't know. It starts thinking like, all right, if everything's regulation based, like that takes so long to play out. Yeah, it feels like we need like another driver here to like can carry the momentum. Personally, for me.
I don't have anything very meaningful to add to this. I'm gonna say two things. First of all, I found it really funny that Donald Trump today like talked about how he wants Bitcoin to be 150K in his first few days in office. Second of all, I don't think we're close to the cycle top. And I know deep down in your heart that you also don't think so, because or else you probably would have taken some chips off the table. But I think at some point you have to start getting nervous. For me, I think that number is 150K Bitcoin. I think 100K is a bit early, but it's better to panic a little earlier than. I actually don't know. Dan, what if you don't make it? What if you take chips off the table and you don't make it? You ever think about that? You can always get another job if you lose a bit of money, but you can never like make more money.
That's
By
the
taking.
problem, isn't it? That's exactly why everybody gets addicted to leverage, and then now we are where we are, right there.
Yeah. As Ryan Connor says, you can always get a job if you lose it all. So load up the margin, lever it up, slider to the right, and let's take some risks.
Yeah, it's interesting to see the. I mean, it never fails, right? Like prices go down and people freak out. Um, I think in times like these, it's you know, being a more fundamentals oriented person is much easier than being a trading oriented person, because you're constantly just like guessing what like numbers on the screen mean. Then you'll never truly know, because all you can see is the order book. You don't see intentions, and you're just kind of like betting on statistical happenstance, and what you've seen in the past, and hoping that that carries forward. I think as like a fundamentals oriented person, like I can think of a lot of things that I would have liked to invest in, would I would have liked to have caught that have run to dramatically like insane valuations, and a pullback is very welcome under those circumstances, right? Like if you look across the crypto universe today, um, there is no margin of safety, right? You're buying the 10,000. You're buying the 10,000 times sales coin, and that's giving you no margin of safety. You're basically betting on the greater fool to come in and pump it to like 15,000 times sales. So very much, this is a welcome pullback. There's some things that look attractive. If you missed Hyperliquid, you hope it goes down, right? You really hope it goes down, and
It's not.
yeah,
It's not going down.
and it might not go down, but you hope it does if you're not
Yeah.
exposed. So, yeah,
The
these things open up opportunities. I'm excited for those.
the other reason that the other interesting thing came up in our conversation the other day, Boccaccio, was you mentioned it can't be a cycle top because Ethereum hasn't cleared an all-time high, and Solana like barely tapped it. And so I want to touch on that a bit, because I think that's like an interesting point of discussion. Historically, you would definitely have not seen that, right? Like last cycle, everything ran to like considerably new highs. And like anything that was launched that cycle, it was multiples higher than its launch price, basically. However, you could like make a pretty coherent argument for like why ETH wouldn't hit a new all-time high this cycle. Like it's faced a lot of consistent headwinds, and I'm not saying I think that it shouldn't hit a new all-time high. I'm just saying I think you could put a pretty coherent argument together around like the fundamentals changing, it being at a point in its growth cycle where it choosing the L2 roadmap like could be the correct path forward, but in the short term there might be like pain that leads to long-term gain, basically. And this is where we are in that growth cycle of that design decision. And then on the Solana side, when you look at price, yeah, that like barely tapped the previous all-time high, but on a market cap basis, it's like 50-60% cleared over its previous all-time high. And I think that's like the more relevant metric to look at here, just given it was a fairly new token last cycle, very early on in its issuance, token issuance life cycle. And, fast forward to today, it's like mostly issued. The final unlock comes in March. And so, yeah, I think actually Solana has kind of cleared that all-time high benchmark.
So I'm going to say a few things. First of all, I still subscribe to the cycle boom and bust. I think like we get the same exact cycle basically every cycle until we start getting a bit more legitimized. I think we still subscribe to that right now. And the reason for why I'm with Solana, the market cap's a fair point, and I agree with you. I still think 50% is too low. On the other side, ETH, I mean, this thing has an ETF at this point. Like, it doesn't matter. You and I know that it's like ETH has some issues on their side, but the narrative is still pretty like clear for the ETF buyers. No, it's the world computer, whatever, smart contracts, the global bond, whatever you want to put in.
I don't know,
like,
honestly. I think I really want to listen to like I would love to hear like how just be a fly on a wall for like a Bitwise conference where like I love Matt Hogan and Ryan Rasmussen, and I would love to hear how they pitch it to that crowd. Or I'd love to hear about like someone from Fidelity's team think about how they pitch it to these TradFi giants. I think that's like a really interesting thing to think about, because what is that story? I definitely agree with you that probably most of people listening to this podcast are, and myself included, like get too far into the weeds of like trying to understand the inner workings. That's great on a long-term basis. That's, how you seek the truths, but in the short term, what matters probably is like the narratives being talked about.
Yeah. Also,
I think
Ryan, before you jump in, one second, like to watch that Bitwise pitch, you can just like Larry Fink talks about it on CNBC and stuff, and that's what I think like most people hear. They don't hear
Agreed.
us saying like the L2s are cannibalizing out the L1. They hear that there's flows into this. They hear that it has like consistent like returns, not returns, yield, rewards, whatever they like to call it. And I think that's the pitch that most TradFi people get.
I think so. I've been in the room during those pitches from Bitwise and issuers like Bitwise, though it was during the 21-22 timeframe. The story is very different now, right? Where you have competitors to Ethereum that are like very well known in like traditional circles. Like if you look at what Coinbase covers from a research perspective, they're focused on Bitcoin, ETH, and Solana. When you're a TradFi guy and you're looking at where the opportunity is, the relative market caps matter and the relative activity is going to matter. And when you look at what Fundstrat is pitching, for example, like ETH is not an easy sell. Solana is a much easier sell. Increasing network activity, dominating in revenue, lower market cap, right? So it's a pretty clear cut story. And I think that TradFi is going to see past a lot of these like blatantly silly narratives. Like the internet bond is the worst narrative of all time.
That's my favorite one, man.
I'm like somewhat offended by that narrative. It couldn't be more wrong across more dimensions than like most of
Well, you're lending.
it really grinds my gears. I can't stand internet bond. The volatility profile between ETH and a bond is completely different. A TradFi person will look at that narrative and be like, "What the fuck are you talking about?"
Not
like,
over the last 6 months, but yeah, I get what you mean. You're right.
Yeah, it's nonsensical. And then when you scratch below the surface and you see like the yield that you get on ETH is simply like just issuance, right? Like the MEV yield is like 0.5%. Like it's a very different story. TradFi folks are going to see through, but are going to see through that.
I want to give another actually a concrete example of here when it first like punched me in the face personally that TradFi is going to have a very different frame of mind around how they think and conceptualize what these things are. And that example is, I believe it was Matthew Siegel from Van Eck. I might be butchering the name there, but it was someone from Van Eck, and they were on, I think, like a CNBC type show, and they said that 4844 and the introduction of blobs was a price cut for Ethereum, right? And like crypto Twitter had a snapback reaction of like, you're an idiot. That's not what they're doing. And like talking about the story of the L2 roadmap, when you take a step back and you're like, yeah, no, that is of course how these people are going to think about what just happened, because they did reduce the cost for this in the name of scalability. And that was like this interesting moment where I was like, like, we talk about institutions are coming. Well, yeah, that's probably true. And in that case, they're going to think about things much differently than the discourse on crypto Twitter.
Maybe to round it out, I do want to take a step back, and if we mentioned ETF flows, and just sort of reviewing the recent volatility around 100K for Bitcoin, despite the short-term price action of the past week. I mean, the ETFs have seen inflows to the tune of around $500 million a day for the past several weeks, several months at this point. So if you're that guy loading up the 100x leverage long, I think you could have done it a while back, maybe even at the outcome of the election, rather than waiting for this elusive 100K target to decide to go all in. On the ETH side, it's not been so clean of a straight line up, but ETH ETF flows have also seen a bit of a bump. But for Bitcoin, there's been this strong inflection since mid-October, and that has not slowed in recent time, despite the actions this week with price.
How often is it that large funds have to report their holdings? I think it's on a quarterly basis, and that's kind of like when you get to see who is buying these ETFs, because there's like two different groups of buyers in traditional markets, right? Like, well, I'm sure there's more than two, but like in my head, you've got the mom and pop buying for their brokerage account versus the actual institution buying. And also, while we're on this topic, it's a new pet peeve of mine that's forming is like everyone tweeting like BlackRock is buying your ETH, BlackRock is buying your Bitcoin. Like that is not how this works. And like I'm not even totally convinced that people are aware of that.
No, literally not how it works. BlackRock is not buying your bags. They are providing a service to help you buy Bitcoin and ETH in your brokerage account. They're taking a small fee for it. They are not making a discretionary decision, right? And popular CT influencers still do not understand that dichotomy. Like BlackRock is not discretionarily managing crypto exposure.
Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, SKALE. SKALE is built different. Unlike other layer ones, SKALE is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. SKALE operates like the AWS infrastructure model, where developers pay for space in the network in SKALE tokens to validators. Essentially, SKALE has chain fees and not gas fees. This allows for free transactions on SKALE and has saved 46 million users over $9 billion in gas fees. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. Visit the SKALE Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research. Chaos Labs, the leading on-chain risk management firm, recently launched its new flagship Oracle product, Edge. Edge delivers integrated, high-precision risk and price data for any application with a market. After 2 months of securing Jupyter, Edge has already secured $30 billion in volume and more than 60% of all Solana perps volume. Edge is comprised of 3 components: high-precision price data with an integrated risk engine, automated delivery of real-time parameter adjustments on-chain, and secure delivery of custom data points via zero-knowledge proofs. Follow and reach out to Chaos Labs on X to learn more. Thanks again to Chaos Labs for sponsoring today's episode. Quick shout out to the sponsors of today's episode, GLIF. GLIF is Filecoin's foundational DeFi primitive, enabling Filecoin holders to earn rewards on their Phil tokens by lending them to a diverse pool of Filecoin miners. Similar to LSTs like Lido or Jito, GLIF solves a major capital inefficiency for Filecoin. GLIF currently has over 19 million Phil deposited and over 150 million Phil in total volume, and is backed by the Filecoin Foundation, Multicoin Capital, and more. Got Phil? Deposit it with Filecoin's first and most popular DeFi protocol by visiting glyph.io today. Thanks again to GLIF for sponsoring today's episode.
All right, biggest thing that happened this week is last week. When the hell did Hyperliquid launch? The days are an amalgamation. I don't know how anything works anymore. But Hyperliquid launched, and my boss, my manager, Ryan Connor, asked me to make a comp sheet, which I actually hard coded the numbers into on Google Sheets, so he might kill me. But this is what it looks like. So this, I'm gonna first do comps based on perps, and then we'll do comps based on chains, and then we'll bull post or bear post about it. So this is at 150% zoomed. I hope that works. Okay, let's run through this pretty quickly. So initially at launch, I had guessed that it would launch at 3.5 mil, which a 3.5 bill, which was actually like undercut. The team launched at 2 bill, which I think is ridiculously low for a really, really good product. They essentially gave everybody a 5x if you just held or bought the launch. Yeah, so based on fees, I mean, these guys do more fees than anybody else, including GMX. This data is based on DYDX's fees, so because Hyperliquid's fees aren't public, which is kind of not great. But
What do you
based
mean
on,
by that? What do you mean by fees are not public?
well, it's just like with Hyperliquid, some of the fees go to the HL people, some go to the insurance fund, and the rest just go to a variety of smart contracts, which I am unaware of, and they're not collected anywhere else. So I'm basing this off of DYDX. I assume that they're going to start clarifying that when the chain launches and when Hyperliquid staking is done. Because I assume they're going to do some format where it accrues value to hype stakers. But for now, it might also be that I just haven't looked deep enough, to be honest with you, Daniel. Like, it might be very obvious. I just haven't been able to find it. I know like a portion goes to the HLP pool and a portion goes to the insurance fund, but I don't know which portion and how much.
But you as a trader, like, you know, if you pay like 10 bips or whatever.
Yeah.
Cool.
Yeah. But the thing is that you can't really do it based off that because obviously different volume tiers have different fee rates. Maker taker fees vary. Also, market makers typically have negative fees. So yeah, I based it off of DYDX, which I think should be a pretty good comp. And what we see is that over the past 30 days, Hyperliquid, based on my assumptions, has 19 mil in fees, annualized, which is 227 mil. And at an FTV of 13 bill, it is at 57.19 FTV over fees. Previously, Drift and DYDX were comparably much, much higher. So I think that like FTV over fees premium that Drift had just doesn't exist anymore. Ryan, do you want to jump in here and grill me a bit?
All right, I think like it just goes to show like the easy gains have been made in Hyperliquid, and I think the premiums deserve because it's trying to build out a spot ecosystem. Like,
And that's sorry.
oh yeah, so seeing those comps is like, yeah, it's that's the critical thing.
Yeah, so now I'm jumping to the chain comps because like you said, they're trying to launch an L1. Which actually they added permissionless testnet validating for it today, so I assume it's relatively close. The launch of mainnet, we'll see. But based on that, I think, Ryan, do you think we can take the same fees for it because the fees are still paid to the L1 anyway? So based on those fees, it is relatively undervalued, I would say, like drastically even. Sui, this really shocked me, and this is partially why I wanted Dan Smith on here because I want him to kind of help me out with this. I'm very stupid, low IQ. Sui had $83,000 in fees over the past 30 days, according to Artemis. Aptos had 55.6 K in fees over the past 30 days, according to Artemis. Annualized, these are ridiculously low, and it puts their FTV over fees ridiculously high. Like Sui at 36.2 K and Aptos at 18.55 K is ridiculous compared to Hyperliquid, which is 57.2 still, because we're taking the same fees over 30 days. How do you make sense of this? It feels too good to be true at this point, to the point that I'm like, does that make a lot of sense?
Yeah, my first comment would be that like, yeah, so those, I think that, you know, I trust the data providers here. The problem though is that you're leaving out that MEV component that may or may not exist on Sui or Aptos, but like no doubt it kind of will down the road as that tooling and projects come to market and that ecosystem kind of forms. And stakers end up, being a part of that ecosystem. So like, I don't know, discount these when you don't fully understand a metric in crypto and it like seems high. Like I just kind of like discount it by 75%. So
Even
yeah,
then,
yeah, Hyperliquid. I mean, I think of like Solana's valuation, right? Like on like a forward like rev basis, I think it's trading at like 30, 40 times. So Hyperliquid at 57 times. I mean, that's pretty reasonably priced. Like pricing can get wackier. Um, like easy gains are gone. I think the reason that the token got bid so much is, you had sophisticated market participants seeing the airdrop, seeing the initial price and being like, okay, we have a target valuation. Like we're going to bid until our expected ROI goes down. And like, that's kind of what happened. Now you have like a reasonably priced token and like all they have to do now is execute. Right.
yeah.
And they can expand they can expand the revenue side and they can expand their kind of premium valuation on the market based on that execution. So I don't hate the Hyperliquid story.
Yeah, I think it's a pretty interesting way to visualize the benefit of this quasi app chain general purpose chain, where the token holders would potentially accrue both the chain level fees and the primary application, let's call it. In this case, that's the perpetuals exchange, the fees that generated by that. It's pretty unique. You do see this a little bit elsewhere, right? Like DYDX was trying to do the same thing. Honestly, the overlap between DYDX and Hyperliquid is pretty interesting. So you think back to the DYDX origin story, they launched $1 billion airdrop when that was unheard of. And now they're ultimately building the same product. Obviously, DYDX went on a very windabout way to get here, versus Hyperliquid had the second mover advantage of being able to kind of call their shot and choose their starting point a little bit more, using a little bit more information, honestly learning greatly from the DYDX origin story. And so I think from a fees standpoint, yeah, they're probably poised to do pretty well. And if they do get the, I think the EVM compatible general purpose chain up and running, you're going to see people build over there, right? I think it was Fiddy, who's a Curve developer for the Curve protocol, the application, the DEX on Ethereum mainnet and other L2s. They like launch testnet contracts, so there is some early interest to go be a part of that. I think Hyperliquid did a very good job of capturing that. Capturing mind share. Everybody's obsessed with it. Everybody's talking about it. The product's good. They got people over there. They kind of have this hot ball of users, let's say, and people want to be in front of that. So there's an incentive to take the time and effort to go launch over there. Yeah, I think they got all the momentum in the world. And then I think one of the other questions you're kind of poking at is why are Aptos and Sui aggregate fees so low? When they have super cheap transaction fees, and when you do this, you need to make up for that with a large volume of transactions. Like the gold standard everyone should be chasing after is a high volume of low fee transactions. Solana was the first chain to actually bring this to life, where you saw tens of millions of transactions per day, all paying relatively low fees. But I think Aptos and Sui are trying to take that like one step further. They have like more theoretical throughput, and potentially can keep a more sustained low fee for non-contentious transactions. So it'll be interesting to see if they can achieve the attention side of the equation, right? They've got the sort of the supply side figured out, but getting the demand side is very challenging. And Hyperliquid kind of went the opposite way, build out the demand side using this, again, let's call it like this primary or this chief application, and then build out the supply side later. So yeah, it doesn't shock me that Aptos and Sui have such low fees, right? They're only a year old, year and change. So getting that demand side built up just takes a whole time, like a whole life cycle of bootstrapping an ecosystem.
Just to add a bit of, I agree with you on the Sui Aptos side. Just to add a bit to the DYDX comparison, I actually don't like the DYDX comparison, specifically because DYDX went a different way. I think like the parallel is the L1 parallel. It's pretty clear. But DYDX moved a lot of their matching engine off chain. And as far as I understand, and this exists on the chain today, it's just not an EVM compatible chain. Hyperliquid has put everything, or they've attempted to put as much as they can on chain, including the matching engine, including the order books, which I think is like kind of drastically different. And this is me thinking from a perps perspective rather than the L1 perspective, is that we've seen one, like we've seen some crutches. Drift, Vertex, they use an AMM just in case. Avo and DYDX move a lot of their like components off chain versus Hyperliquid, which is kind of trying to do like this the perfect system, whatever that means to you as like a perps trader, and it's semi worked out. Also, I feel kind of bad for DYDX because I think if they had just focused for another year, they probably could have like not died out this quickly. But that seems to have been the story with, like you said, the second mover advantage. The first mover gets a bit lazy, says we have all the volume anyway. Why the hell would I care? Don't list any assets, don't worry too much about shipping, and then some guy comes in and builds it out for you. Meat of the move being done, I don't know. This is my only thing, is like my targets were 30-40 bill. I don't like talking targets on the podcast that much, but my targets were that. And then honestly, pulling up this comps sheet and looking at the SUI and Aptos valuations, I think like, why not? Maybe not 1600x. But I think there's definitely like more room to grow over here because they have a good product. It all depends on execution, like you said, Ryan. Really about like what they can do with the L1. And I don't know. This is one of the few teams that I can like comfortably bet on in crypto. Oftentimes, like a coin having a team to me is a bad thing. But this coin has a good team, which makes me happy.
Yeah, I think it's all about if they're able to bootstrap the spot asset ecosystem. Historically, the path that they're taking is very different, right? Spot asset trading has come first, and then like the derivatives ecosystem came next. They are doing it backwards, and the spot assets are everywhere else, right? So you have to convince spot asset issuers that there is enough sticky volume on Hyperliquid to go issue assets over there or set up bridges to go over there. TBD on if that works. I think it's really hard at this stage in the game. They benefit from ETH kind of like fumbling and causing that fragmentation and confusion for EVM based asset issuers. Like, given the position that Hyperliquid's in, like maybe Dan, you mentioned Curve. That's pretty interesting for them to kind of like reinvigorate that token in a new ecosystem. I don't know how much market share they're going to take from the SVM side of things, however.
I think that's a fair point. And we'll see. This is the next topic that I want to talk about, and I think it's going to be a pretty decent segue. We're seeing an actually relevantly significant shift on the EVM side this year. I said this before, and Dan Smith called me a retard, but I don't think the current implementations of L2s are good. I think they're dog shit. I think the alt EVM stuff like Avalanche and Binance and Phantom, I guess, where they just changed the E to an A and they're like, oh, this is actually the Avalanche virtual machine. I don't think they were particularly interesting as well. I think it was just like consensus changes. Please correct me if I'm wrong, anybody. Okay, but I'm excited for Monad. I know a lot of people are saying Monad's going to flop. I'm excited for Monad. I don't care if it flops this cycle. I think it's still like what they're doing is cool. Like they're actually trying to rebuild something and make something efficient, and I find that exciting. I don't care for that community aspect that they're trying to do. I'm sure they'll do well for them, but like I'm not going to be on Discord grinding away to get allocation. But I do like what they're building. Berachain, a lot of Berachain haters in this podcast right now. I think it's like at least they're trying something new. And lastly, Hyperliquid, obviously. Lastly, MegaETH. I know it's just one supercharged sequencer doing all the work, and then they're like, oh, we have full nodes, but they're actually light nodes. I don't care. Let's try something new. I think it's fun. And I think like the EVM, if it has a renaissance, I think it's this year and next year. And like you said, I agree with you. I don't know how much money goes away from the SVM to Hyperliquid, but I think there's going to be a lot of competition on the EVM side, and I'm excited to see what comes about.
Yeah, I'm excited for the integrated EVMs. I think that they give ETH developers a kind of like new and expanded sandbox to play in. They'll be able to do things that they couldn't do elsewhere. And I think that that's important. Poking around on Arbitrum and Base over the past few days, I was quoted $5 trading fees. That's a big number compared to what I'm used to, and that puts a ceiling on your activity. So it's I think the important thing when looking at these ecosystems is to not write them off too quickly. Like historically, how long has it taken for a chain to like show any meaningful activity? Like 18 months. Best case scenario. Maybe Hyperliquid's an exception. Like I think you need to. I think it's important to be patient. That being said, like I think Monad is like something pretty special with what they've done to bootstrap the community before the product has launched. That's like very exciting to me. I think you need an HBS study on that if Monad ends up being a thing. Like people are hyper excited about that.
This is the only thing I'm going to really strongly disagree with you on. I love you, Ryan. I really don't mean to do this, but I think that community is like in crypto, all communities are relatively fake. I think like I love Monad. I genuinely do. I think it's super, super cool. But like that Discord thing, I think it. I'm happy to be wrong. Not really, but I like if I'm wrong, I'm wrong. But I don't think it unless they can deliver like that thing can turn quite negative. Which I think they will deliver, so it should all be fine.
Yeah, I think community is mostly BS. But like I don't know, they have an army of people posting this like little purple character and raising awareness for a thing. I haven't really seen that elsewhere, so I think it'll be interesting to see how quickly they can bootstrap it, given that they do have this enthusiastic base of supporters. Free product.
I do agree with Ryan a little bit here. I mean, I think the kind of cultiness factor we've seen, even products with, or maybe projects without products with any usage, that build strong cults see, relative success from maybe a price perspective. Regardless of that, I do think what Monad has been doing, like pre-launch, in regards to fostering startups, having competitions to encourage builders to start working on app ideas for the chain. It's a little bit different than I think we've seen from any other chain previously, where typically the product comes out and you get all the the quick kind of copycat apps from the same ecosystem. If it's an EVM chain to an EVM chain, you get all your swaps and your lending apps really quickly. I've seen quite a bit of variety out of at least the early startups. It's sort of TBD when they launch. We'll see like what actually gets used and what's real, but at least from that point, I'm relatively excited to at least see what kind of they've got built when this thing launches. Because based on what we're seeing now, they should have like a vibrant ecosystem of apps on day one, which would be quite interesting compared to other launches where a chain and a token come out and then there's nothing to do there for months.
Or there isn't even a chain.
Or there's no chain and there is a token, and it's locked up in a contract on Ethereum.
Yeah.
Yeah.
Danny Smith, any takes?
Yeah. First of all, I don't think I ever disagreed with you that EVM for like forks of Geth as L2s were like good. I don't tend to think that.
No, you
So
said they're bad at I said they're bad at execution. You said they're not.
we got into semantics debate about what execution means. So yeah, no, I generally agree with you in the point you're making here. On the Berachain piece, like I just sent you a tweet of Eden Web3 Global, which is apparently the first sexual products on a blockchain built on Berachain. So like, yeah, you want to know why I don't think it's real? Shit like that. Like, is it different? Is it cool? Is it different? Yes. Is it cool? That is your decision to make. But I'm curious about blockchains as asset ledgers and the transfer of financial assets on chain. That's what gets me out of bed. Pun intended, I suppose. And so when I think about like Monad, like, yeah, I agree with you. I think they're doing really cool stuff on the tech side. None of it's been published yet. They're keeping everything closed source until launch. Makes sense. Keep your edge. I don't hate that at all. I don't know. I think I also agree with your point. I basically agree with everything you said. I'm realizing I'm just agreeing out loud now, except for Berachain. Color me a hater.
what about Berachain? One thing I'm going to say, and then we can move on to something else. I think that Cosmos EVM connection thing has been like something that the Cosmos is working on for so long, and it just hasn't happened. Canto, Evmos, it's clearly a tough thing to do. So I'm excited about that. I think it's going to be super duper PvP. And basically, like, you try and
Yeah,
get
agreed with that. They're building an arena for like everybody who fucks around in the trenches to come compete, and like that's probably a good thing, to be honest. In terms of product standpoint, like that's everybody in this industry, right? Like Solana has won a lot of that attention so far with this meme coin game. So if anyone can iterate on that game and bring it somewhere else, I think that's like a pretty big, like yeah, that's a multi-billion-dollar opportunity in my mind.
Yeah. Yeah.
But I'm just, yeah, whatever.
All right, we're good, guys. Thank you so much for coming on. This was a pleasure. Yeah, thanks for coming on.
Until next time, my friend.
Until next time.
See y'all.
See ya.
Thanks again to Scale for sponsoring today's episode. If you weren't already planning to, make sure to go check out Scale's ecosystem. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network. And visit the Scale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.